This is your host, Stephen Sargeant. DPAN, blockchain infrastructure, this is all the rage as Bitcoin prices keep on going up. But today we have the CEO and co-founder of the Stability Protocol. So we're going to get all into the nitty-gritty of blockchain. We have Klay Nichol coming on the podcast. You may recognize that name. He used to be a professional figure skater, and he's going to go deep into what his protocol is doing, how he's staying ahead of his competition and differentiating his protocol from others in the system. This is a really great episode. You want to listen to the end. And we do touch a little bit on Klay's figure skating career and what it was like working to that goal early on, and then working at places like JP Morgan, working at Galaxy Digital, some of the biggest blockchain companies in the world. Hope you enjoy this podcast, and reach out if you have questions and rate and review. This is your host, Stephen Sargeant, Around the Coin podcast. And who better to have to talk about stability but the CEO and co-founder of the Stability Protocol, Klay Nichol. Klay, I'm going to go jumping. Usually I like say, what's your background? But you're a Canadian figure skater. I love Canada. I'm from Canada. I grew up watching, especially like Tessa Virtue. Like those are people that I remember. So tell us, you started your journey out in the Canadian figure skating, circuit champion. Tell us a little bit about that, because I think that's super interesting.
Well, Stephen, it's great to be here, and thanks for having me. Most of my conversations don't always jump there, but happy to get into some of the background. So I fellow Canadian, like yourself, proud Canadian, and I'm actually calling in from Canada right now. I'm in Manitoba, Canada for a semester, usually living in Los Angeles, California is my mainstay. But yeah, I grew up here in Canada, I was a hockey player like every other rural Canadian farm boy kid. And when I was pretty late, 12, 13, I started figure skating and kind of things progressed quickly. And I left home at 16 to skate on the national figure skating team. And I got on the ice, in Kitchener-Waterloo every day with Scott Moore and Tessa Virtue. They were my training mates, and Scott stayed with me quite a bit. And we had one of the best rinks in, I would say, Canada or the world. And it was an amazing ride. Won a couple of national championships in ice dance, kind of following Scott and Tessa. I'm glad that I retired at the old age of 21 because, as you know, Scott and Tess and some of our other training mates that were at that rink as well kind of dominated global ice dance figure skating for the next decade. And so very, very privileged to have gotten to train alongside with all them. It was an amazing experience.
I love it. And then you get into corporate kind of America with investment. But I want to see, did you notice any business aspects? I know you were, probably in the amateur. I don't know what the difference between amateur and pro when it comes to, I don't know if there's a pro figure skating. I don't know.
No, just amateur. Yeah.
What were was there any kind of business aspects or even just aspects, like the amount of time that you had to put in and dedicate to this one thing for 5 years? And then you're kind of like, oh, okay, it's time to move on. What are your thoughts around that?
Yeah, well, two things. I think grit, getting up at, 5:30 every morning, skating for 3 hours, going to school, come back as a young person is a pretty great, it instills a lot of discipline. So that's carried through. But on the business acumen, leaving home at 16, having to really take care of yourself and be smart and thoughtful and how you're approaching your day-to-day life. That kind of set the tone, I think, for me. But I've always had a business and entrepreneur spirit, but that independence and having to, really focus and build a career, both first professionally and then as well in sport, really set the stage, I think, for where I've gone to in my career professionally.
You must tap into the Winter Olympics every now and then, see who's the up and comers, see if they do the triple axel right, if they were on sync every now and then. What do you think about the sport? It doesn't seem like this generation is talking about figure skating as much as they did, but we do see a rise in individual influencers where it's like, oh, Livy Dunn is like a gymnast, and people are following her, not so much the sport, but her specifically, or they're following football now because of Taylor Swift. How have you seen the sport maybe evolve? Maybe not get as much attention. What are your thoughts? Did you even think about branding back then yourself, or is that kind of taking care for you?
Yeah, not as much. Like 2003, 2004, and that timeline, social media was just kind of hitting its stride. So I think branding, viewership, all of those things has changed a lot in the last 20 years. A lot of folks kind of aren't watching all together. Like when you grew up in Canada, like Canadian nationals are on, like everyone's watching live at the same time. And there's like this collective feeling. Same with the Olympics, like you're all like, and now we have people can kind of watch on their own time and they actually get more focused on individual athletes. I think a big aspect is how much promotion happens. Like, there's breakdancing and we the Canadian breakdancer, right? So now there's like a ton of focus there. So it feels like a little bit more dispersed and, there's like particular athletes and we don't have that same viewership of all being in sync, funny enough, viewers at the watching the same time. And that collectivism feeling, I think, has kind of changed a little bit over the last 20 years.
There was that energy though. And that's why I think I was so like, when I saw your background, like there was that energy that you can always remember around that time and the coverage. And now it's kind of like, oh, we might just watch 13 minutes of the highlights of the 4 hour, the 4 hour presentation and all. We'll just watch like a 12-minute version on YouTube and kind of keep it moving. Feels like we don't have that same amount of, we spend a lot more time watching TV though back then. But then you transition, you go to LA, which doesn't seem as much of like a financial hub as like even Toronto, for some might say. Seems like more like, business development, more Hollywood. What was that like? What was the infrastructure like out there for business in LA?
Yeah, so that transition, there was a couple jumps in there. So I went there because of for work, but I was in Toronto to start. And so I started in Toronto. I went to Wilfrid Laurier from a business first program. That was an amazing step because it had a co-op option where you could go get like really great jobs. So for young people who are thinking about post-secondary education or parents thinking about putting their kids, I think a co-op option where you can actually go get real world experience at investment banks or consulting firms or tech firms while you're in school, that was a big aspect. From there, I went to the buy side at AGF and did buy side. Then I went as a gold analyst at Credit Suisse. So I went to all around the world, traveling gold mines, looking at underground gold mines, writing the research reports. And that was right during a time when the market was going from like $900 to $1,900 in gold price. And it was a really amazing place to be. From there, I went to London, England, and did sales and trading for Credit Suisse, which is a very fascinating role, helping hedge fund managers and portfolio managers pick stocks. And then from there, I went to LA, where I went to JP Morgan, did something very different, where I was a ultra high net worth private banker, helping some of the most prominent, entrepreneurs in California and family offices manage their wealth and be their strategic advisor. So that was an amazing 8-year journey working with some of the most amazing people in the California sector.
I love that. I want to talk more about the gold if we have time, but that seems like a kind of crazy market going into gold mines around the world. Let me understand a little bit more about, when you entered the realm of cryptocurrency. Where was it? Was it kind of when you're still at JP Morgan, you heard about it? Like, where's the time you're like, oh, I've been in business, I've been in banking, I've handled all these, I'm in gold. When did it like click in? Was it like, oh, like this would be a lot easier if we could do this online versus me having to visit every single gold mine around the world, sometimes in areas that may not be, the safest. What was the like aha moment where you're like, yeah, crypto makes a lot more sense. Digital assets make a lot more sense.
Yeah, I was at JP Morgan at the time. It came into my purview largely because I was covering some tech executives, and West Coast being a very early adopting thought leadership geography, it kind of came into my realm, and Bitcoin came into my realm. And so, as you can imagine, coming from analog gold and now hearing about digital gold with Bitcoin, there was a real interest to dive in deep and understanding like, hey, what is this new primitive? And so I did dive in quite deeply. It did resonate, the understanding of how money works, the history of money. We can dive into that and Bitcoin being a store of value and being one of the potentially hardest digital assets out there. All of that resonated for me well. And then from there, it transitioned into 2014. You saw or a couple of years, Ethereum, this like global compute, right? Like this global computer decentralized, and that then kind of, and smart contract, that got me excited. Now, I was at JP Morgan at this time, and as you know very well, Jamie was very kind of anti-crypto, very, very blatantly anti-crypto. And so I started going to LA crypto meetups on crypto, and they just started going. That's when I met my co-founder way back then in 2017. And I had to be quiet about that, right? That was not something that you advertised at work, that you were going to crypto meetups. But yeah, I was very curious, spent a lot of time in the space in those early years.
Was it the same sentiment externally? Like, hey guys, we don't talk about crypto around here. Or was it more like, hey, I think crypto's a fraud, but we should still have people looking into it. Like, we should still have people, because I'm assuming by the time 2017 hits, customers are starting to kind of ask questions like, hey, where do we buy Bitcoin, or what is Bitcoin? Did you feel any of that, like that dichotomy of like, hey, we're told we don't care about it, but also like, hey, something must be going on here if some of the other companies are getting involved in it?
Yeah, I would actually say in that time period, there wasn't any real retail interest of relevance. And when I mean relevance, I'm talking, centimillionaires and billionaires saying, I want crypto and I want it on my bank statement, custody by my bank, right? Like, right. That wasn't happening at that stage. So my crypto entrepreneur, or sorry, my tech entrepreneurs who had a bunch of crypto, they're like, hey, can you lend on this? Right. In 2017, it's like, no chance. Right? That's not happening at JP Morgan. That was barely happening in the retail market at the time.
Right.
So I would say that my fast forward through that whole journey, I left JP Morgan. I was a, very prominent banker in JP Morgan's private bank in Los Angeles. And everyone thought I was crazy because I left to go to work with Mike Novogratz at Galaxy Digital. And the reason I did that is I did see an opportunity that there was so many efficiencies that these new banking rails, right? Blockchain banking rails could create, right? And I was living the last prior 10 years of this archaic system that was paper-based at the start, going back 100 years ago. And we had all this tech debt that we just kept adding on, right? Like trades used to be like T+5s, right?
Right.
In the 60s and 70s, they had like a crisis of paper, right? And because there was so much trading. And so now we've been trying to get almost down to T2, T+1, but we still have this archaic system, right? And then we added in this veneer. I call fintech like a veneer, or payment tech, a veneer in front of this archaic system. They got the old archaic banking system. You put this really beautiful UX in front of this crappy old system. And that was this whole fintech space for a lot of years. And blockchain's this new backend, right? That completely wipes this part out. So fintech firms, as well as banking firms, are all like, oh goodness, this could completely disrupt me, right? And that's the part I saw where, global remittances, corporate settlements, all of those things could start being automated and costs being pulled out. And I'm like, okay, if I can get the big corporates involved and we can get institutional adoption that we've all been hoping for, we're going to find product market fit for public blockchain. And I left. People thought I was nuts. And my first task at Galaxy was onboarding digital asset funds to the biggest bank platforms. And that's what I did. I helped onboard the first digital assets to Morgan Stanley, Goldman Sachs, PNC, some of the biggest brands in the US and abroad. And after doing that, I realized that we were no closer to product market fit.
And why do you think that was? You see these, and remember, like at this time too, everyone's like, hey, we need institutional adoption. That's how Bitcoin is going to grow. And then, but now you're seeing it from the back end, like, hey, institutions are adopting this and getting involved. What do you think was the missing puzzle piece that for like more adoption or mass adoption? Was it simply like, hey, we need the price to go up so more people get excited about this, not just these big institutions that can afford to put millions, if not billions of dollars into it?
Yeah. So there's two things I think we need to bifurcate the Bitcoin aspect, store of value, like, you know, swapping out analog gold for digital gold. That's one thing, right? From an investment perspective. And then there's the utility of what blockchain is the technology. And that's two separate things. And so I would say the insight that I can share that's unique is that the only reason that the bank said yes to onboarding a crypto fund, like a Bitcoin, Ethereum, or an index fund of cryptos, is because their largest clients demanded it. And therefore, the top of the house said, even including JP Morgan, which also onboarded a Bitcoin fund for its customers, they mandated it because, as I said, they wanted to buy it. But if you're a big JP Morgan or a Goldman client, you're not wanting to go to a Robinhood account or something else. You want to see it on your statement, and you want your overall asset allocation to consider this investment, right? And so that's where the top of the house, the CEOs, the top business folks told the general counsel, legal team, get it done, right? And I think that's really how that happened. That is all on an investment side. On the technology side, totally different thing. When we're rebuilding the pipes, that's a different conversation. And that has really gone in a private blockchain path versus a public blockchain path.
Do you think that, having people like Kevin O'Leary be not against Bitcoin, but like I remember him telling Pomp, like, you're crazy for having all your, your net worth in Bitcoin, and then slowly kind of changing his mind? Do you think that play out in the public? Because it didn't seem like he had a vested interest in the talking bad about Bitcoin, where Jamie almost seems like, hey, they're killing the traditional world. Of course, they're not going to say the thing that could disrupt them is great, right? Like until they can get their heads around it. Do you think
Well,
that
Jamie,
the way the meat?
yeah. I discount, grew up being Canadian, heard a lot of Kevin O'Leary on BNN and all those places, right? So Kevin's a salesman, and it was interesting to watch him go from being a hard hater to supporter, right? But he followed the dollars at the end of the day, right? And so I think the thing to realize, though, Jamie and JP Morgan would say no to crypto, right? Cryptocurrency, yes to blockchain, right?
Right.
And not only just say yes, but lead. They are the dominant leader in blockchain technology in traditional finance by order of magnitude. They are today have $1 trillion plus amounts of value on chain, but it's a private chain.
Right.
It's the Onyx chain, right? And so, yeah, that's
I was
the
gonna say, like,
difference.
what did you think when they came out with like the digital coin JPM? Were you like, like, was that an interesting point for you?
It was natural. There's an arms race in traditional finance right now. Everyone sees the opportunity, efficiencies, atomic settlement, all of these benefits, digital trust that blockchain can enable, but they can't engage with the public blockchain. It's a non-starter. These banks are highly regulated, and they don't make any decision without the regulators kind of telling them it's okay.
Yeah.
And they're not going to say it's okay on Ethereum or any public network. And we can go through the reasons on why. So they're forced into the private chain space. And so now every bank is in an arms race to digitize or tokenize every QSIP, which is basically the identifier of every security, every bond, every equity, starting with treasury bonds all the way to, equities and private instruments. That's the arms race that's going on, but they're all doing it in their own walled garden, their private blockchains, because they can't play in the public space. And so that's what we're trying to help them enable to do with stability, is enable them to actually play in the public space, which is the future of public blockchain and establishing digital trust for the world.
And I want to get into stability because, your friends are looking at you like, hey, you left LA, big business, high net worth, liquid lunches, maybe, fashion promenades. And then you hit another home run with going to Galaxy Digital. So they're probably like, hey, this guy kind of knows what he's doing. And then at the top of that, you're like, you know what? Let me start my own protocol. What was kind of like the feedback from friends groups around that time? We're probably a little bit more educated about cryptocurrency when you make that leap.
Oh yeah, my co-founder Julian Braden and Mike Mathis, and they've been building in the Web3 space for a long time, right? 5, 6 years prior to that, that entire time I was at JP Morgan and then Galaxy, they built probably one of the first liquid staking platforms ever.
Oh,
And did this across 11 different blockchains. And it was a community staking program. Again, very thoughtful approach that they had. And so, which is why I was really, stayed close with the guys and we reconnected here. So that transition, when we were thinking about building this, we went and asked all the smartest like L1 founders and top thinkers in the space to really underwrite why hasn't there been a feeless public blockchain with no cryptocurrency dependencies ever been built before. And we got a lot of different answers and a lot of them didn't really land. And we realized, wow, there's just actually some mental models here that need to be bent or broken. And the upside here is so great that if we just stay in this small Web3 space where there's like 5 to 10 million people doing an on-chain transaction, we need to get to the billions of people in the Web2 space and help bring them in. And everyone's been trying to, but we haven't been able to bring the enterprises in, and we can barely bring in the retail. And we thought we could do it with speculation and getting tokens and cryptocurrency, but that means we have a lot of speculators and not a lot of users. And we need users, right? And what does user mean? User means that there's utility there, right? And so the industry has lacked utility. And so our mission at Stability is to be the most accessible public blockchain that's optimized for utility and removes all the barriers from enterprises and as well as retail users from using it, right?
I love that. Let me ask you about this. What do you think when you said you heard a lot of different reasons from these L1s? What do you think it is? Is like, hey, this is the wheel's round. In the wintertime, we can add stubs on time. Like, do you think they were just kind of building off of this and nobody said, hey, should the wheel be round at all? Like, hey, what if we reinvented the wheel being round? Do you think that was it? Nobody was questioning kind of the foundation and everyone was kind of adding their own features, but you're kind of going back and saying, hey, why is the wheel round? Why are we doing it a completely different way?
That's right. And there was like, okay, we were also looking at the inefficiencies, like how much money they were spending on customer acquisition. Right. That's what they called it. They called a lot of these token airdrops and there's fees burnt. There's a lot of different things here, right? All to drive value to a cryptocurrency. But even some of the foundations, which have large foundations, are spending billions of dollars on airdrops and incentives and all that. And that's all customer acquisition. But when you look at the customer acquisition cost, it's like, for some of them, it's like thousands of dollars per user, which is like equivalent of what you would use to like sell a private jet. Right. You're acquiring, some kid in their basement. You know what I mean? Like this doesn't necessarily make sense. And then are they really staying and are they loyal and all that kind of stuff, right? So we looked at a lot of those different aspects. We looked at, I think, four key barriers that we saw. And so let's hit those as our takeaway when we kind of finished our summit. And that was regulatory risk regulatory compliance and reputational risk, right? Is not going to allow a general counsel of any corporate from saying yes to a public blockchain for the most part, right?
Right.
So most like 80-90% people are weeded out there. Then you have the CTO who looks at their users and integrating it, and they're saying this user experience is abysmal, right? Like absolutely abysmal. Like your grandparents aren't using MetaMask and verifying transactions and all that.
I can barely use MetaMask,
right? So then the CTO throws his flag and it's dead there. Then it goes to the CFO as the next person, and he's like, well, how much is it going to cost? Like, if I'm going to strap my business to this thing, not only do I have the reputation, it's all the same, but how much is it going to cost? And we say, I don't know, actually, it could go exponential. We don't know. It just depends on the price of the cryptocurrency, the cost, right? And so CFO's like, I can't run a business with no predictability and I could bankrupt myself. Like, in economics totally go out the window. And then once you get past those three, which no one really gets past those three barriers, the last one waiting for you is scale.
Okay.
And these wet like blockchains, public blockchains don't scale because they're optimized. They have an economic constraint. And that economic constraint is the token. You keep that blockchain congested because you want to have more tokens burnt, make it a deflationary supply to drive the price of the token up, right? Vitalik came out earlier in the year, said, guys, let's increase the block size by 10%, right? Keep the hardware the same. Just improve the utility of this network. We can do this, guys. Computers have improved and a little bit. Like, server infrastructure has gotten a little faster. Computers got hardware's faster. We can do this. And the whole industry said, Vitalik, you're nuts, right? Why? Because it would drive the value of the token lower, right? And so the product is the token, and that's great. Let's just focus on that. It's not, no one says Ethereum is global compute anymore, right? Because it's not, right? Last year, Ethereum did 90 gigabytes of data. That's like a double-sided DVD worth of data. And people spent billions upon billions of dollars in gas fees transacting on that small amount of data, right? That tells you very, very blatantly that it's optimized for the cryptocurrency, not optimized for utility. So that is the kind of the base case. Is we realize that we're not against tokens. We're not against cryptocurrency. They're amazing technology. They're just a standalone tech that is not blockchain. And blockchain is so much bigger than just a cryptocurrency. And we need to get that into the hands of everyone, because blockchain can establish digital trust at the end of the day that doesn't exist today. It really doesn't exist in 2024. Digital trust does not exist.
And would you say to people are like, even critics are like, hey, we need tokens for governance and voting, right? Like, we need it for utility within our platform. What are your thoughts on that? Are people like, we need
Love
this?
that.
Yeah.
Love that. I do love that. That's great. And I think sometimes it's overused, but there are real use cases for a token, and we can issue those. Those organizations can issue those tokens on stability. What we're trying to say is the underlying infrastructure that runs it should not be optimized for a cryptocurrency. It needs to be optimized for use and utility, and it should get cheaper, faster, more performant, more capacity every year, right? That's what we should be optimizing that for.
And to your point, you think a lot of these projects, it's like the whole value is in usually the speculation of the token, what the token like versus like what the token can do for the actual users, right? Like, you feel like the whole blockchain is relevant to the token, take away that token and they really don't have much of a pillar or foundation to stand on.
There is a lot of that in this space. I would break it up in a couple of directions. That the projects themselves, that they have their own token and they're trying to select a network to use, they are having to first be an investor in a layer one. First, they have to be an investor before they can use it. And that's the problem right there. They shouldn't have to be an investor first into that network. A lot of them choose them because they either get a grant or they believe that there's a large community there that will then use their product. For us, we're not really focused wholeheartedly on trying to play that game. We're going to the large corporates that have millions and billions of users already, and giving them a utility and a toolkit to help them solve real first order problems, right? Security, trust, all of the things that they want to, all the use cases where blockchain could be utilized. And so that's where we're focused on really driving adoption, if you will, is helping them do that. And so that's what we did. We've launched our product. We've built for almost 2 years. We launched mainnet March 11th of this year, and our first partner was the government of Singapore to digitize trade documents, because I keep saying digital trust, and that it doesn't exist in 2024. how do we know it doesn't exist? Like, what are you even talking about, Clay, that digital trust doesn't exist in 2024? Well, just look at the world's supply chain, which is how all the goods move that every one of your books in your background or shoes or clothes, right? This all went through a global supply chain. It runs on paper today, paper, just like we talked about with equity trading, transitioning from paper to electronic in the 60s. We're still full paper in the world supply chain. And that's because stamps and signatures are the medium of establishing digital trust in 2024.
And what is the biggest issue with that? Like, I think supply chain, I think HSBC was doing something with blockchain when it came to supply chain. What is the biggest issue of it being in paper? Is it the fact that you have these stacks of papers? Is it the chance of like corruption, illicit actors, forging documents? Like, what is the big, you think, bottleneck that you are opening up for, something like an entity from the government of Singapore?
The inefficiencies are almost endless. So let's just hit the direct ones. When you have a shipment of goods, you get handed a piece of paper from, let's say, Maersk, this bill of lading. And that is like a deed to a house. It's a title document. It's like a bearer bond. And you pass this piece, if I hand this piece of paper to you, physically, you now own the shipment. It's yours. That's how it works. It's crazy. That piece of paper has to fly around the world and get stamped by every bank, insurance company, and everyone to be able to transact and trade. That just the DHL and FedEx bill is $6.5 billion to fly these pieces of paper around the world. Just the courier bills. Now,
Wow.
when you start thinking about how many times can you buy and sell goods going across the ocean on that 2-week journey? Well, as fast as you can fly that piece of paper around. Well, DeFi. You know DeFi well. So if I can digitize those documents, I can strap DeFi onto trade finance, and you can buy and sell all of those products 1,000 times, 1,000,000 times. The efficiencies go through the roof. There's like $2 trillion of accounts receivable that could be financialized, right? With trade finance that aren't being supported by banks, right? All these small businesses around the world, and that could all be unlocked. Trade finance could grow dramatically. More players can get involved. It's just, I could go on for days about all the efficiencies if you can just digitize that. And that's just one use case that we're talking about.
And we saw during the pandemic, especially in, ports around the world, the supply chain expenses like tripled, sometimes even quadrupled. Would this help with that? Is that a reason for those expenses, or is it just become more expensive to move things around the world?
Yeah. Well, inflation is its own thing. I wouldn't blame the price of goods just on these inefficiencies because they've been in place forever. But I would say that we can improve and definitely help bring some of those costs down. And if you can improve financing and improve trade finance and efficiencies for businesses, that can come through to the consumer, right? Because it's not as costly to run the business. So yeah, I think where stability in being able to help the government of Singapore digitize trade documents, and when they've integrated us now, they've done a way more transactions on our network than almost any other network that they've integrated with, because it doesn't require corporates to onboard cryptocurrency. And that's the point, to make that user experience available and accessible.
You've been in finance, you've been in sports. Where do you see the biggest use cases? You mentioned supply chains with the government. We're seeing people trying to put real estate, carbon credits, tokenization. Where do you see hey, this really makes sense? And this might be a little bit of a stretch. Like, you could do it, but it's kind of like, do you want to, blockchain isn't for everything.
Yeah. Let's go with where blockchain doesn't make sense as much, right? And I think we just got to break it down to what is a blockchain, and it's distributed ledger technology, DLT, right? And it's a database, right? It's a database. And so it's either a private database or a public database. So in an example where you don't have to share the data with a large group of third parties, or even like any kind of sharing, you can keep that in a private centralized database. For example, a lot of people have talked about deeds on homes, right? The deed being on chain and that type of thing. Well, the government of Singapore has looked at that and they would say, blockchain doesn't really need to be used there. A lot of people would say it does, but they're like, we can hold that central registry. We're comfortable. And you can check our central registry on who owns it, right? And we're not going to allow other people just to like move deeds and check and all that kind of stuff. It doesn't need to be public in that sense. Supply chain, where you have a whole bunch of different folks, or any other scenario where you have a car manufacturer and they've got 30 different suppliers, or you have track and trace of food from like farm to fork, and everyone wants to be able to check, including you. You want to check, where's this lettuce coming from, or where's this shirt, or what have you. That needs to be a public blockchain, right? But it needs to be a public blockchain that you can use, that you don't need a cryptocurrency to read or write to that blockchain, right? And it needs to have the scale where millions and billions of people can all access that database. So hopefully that kind of breaks it down on when to use a public network, and then what are the user experience it needs to have to be able to make it accessible.
What are your thoughts when you come to like Singapore? Probably have a nice centralized system for that. But when you get into countries like, hey, like the government isn't acting in, good faith all the time when it comes to registries of property and other things. Do you think that, maybe some of the G7 will be like, no, we want that put in place in certain areas. We want that kind of transparency because we need to monitor, we need to monitor your country more than, let's say, Singapore.
Yeah, that's a very good point, Stephen. I think what you're referencing there is immutability. And what the beautiful thing that blockchain provides is, yes, immutability, but it's a sense of time, right? In a Web 2 private database, you can rewrite whatever you want. In a public database, you have time now, and it's forever, and it's burnt, right? You can timestamp anything and put it there, and so that's I think the big difference of why you might want to use it in that situation. Yeah, in net, we need to be able to authenticate news, right? We need to be able to, like, fake news, right? Like, these are things that we need to be able to, we need to authenticate data going into large language models. All of these things we've got
videos now with deep fakes and AI. You need, like, I think we're getting closer and closer that many of us don't believe everything we see on the internet, whether it's in video form. And I think we're getting closer and closer. There is going to need to be a public chain that, hey, is that information valid? Did this person, celebrity, politician, say exactly what they said? Where is the real data to that conversation? Because we're able to manipulate almost anything. And right now we're using it for jokes and memes on the internet and on Instagram. But at some point we're going to be like, oh, why did the politicians say that? And, why is there so much funding from the Russian government saying that's what the politicians said or did or, or campaign? And I think that we're getting closer and closer to that. We're seeing that every day.
Yeah, it's happened fast, for folks like us that have been following this story for the last few years. It's crazy how quickly it's happening, because the amount of data that's being created is going exponential, right? And it's viewed that in the next few years, like 90% of content on the internet will be AI generated. I think you go back 5-10 years, we had 2 zettabytes of data. Today we have 124 zettabytes of data. And that's going to go to, 224 in the next couple of years. And so we believe a big difference here at Stability, I think, is a unique thought, and I anticipate this view will grow, is that we believe that the value of data is going to decline. Right now, everyone would say data is everything, right? And data is the new oil, and we've seen that in every company you see out in the market, right? But when you get a unlimited amount of data, what really gets to become important is the authentication of that data. And so we see a value transfer moving over from the data, moving over to the authentication piece. And that authentication piece is where blockchain and public blockchain is really going to shine. And it's really just the user experience that's kind of kept blockchain behind closed doors and not really let it out. And I use this example. If I can give a quick thought experiment, very quick thought experiment for you to think through. I shared this in Singapore. I did an event at the US Embassy with Google and Amazon and the government of Singapore and a few of these other guys on the panel that I was hosting. And I asked the audience who here has used ChatGPT, right? And who knows who OpenAI is, right? And so they raise their hand both times. I'm like, okay, great. So I just want you to consider this thought experiment of Sam Altman is launching ChatGPT for the first time, okay? But there's a catch. You have to first connect your bank account to ChatGPT, and you have to buy OpenAI credits. You have to secure those OpenAI credits yourself. If you lose those OpenAI credits, that's on you. There's no refunds, absolutely no refunds, right? And the question I would ask is, where would OpenAI be today? Yeah, I think it's like a $100 and some billion company today. Where would it be today if that was the user experience?
Right. That's a great point.
It wouldn't have got to 100 million users in the first week, right? And so the point is that's what we've done to public blockchain. That's what we've done. And that's why it's not ubiquitous. It's not accessible.
Now, why wouldn't your enterprises that you're onboarding stay on the private? Like, why are you bringing them over to the public versus them being like, hey, is it the kind of use case you provide? Like, there needs to be a lot of people that needs access transparently to this information. This is not just a few companies in the private blockchain.
Exactly. Like, you can probably think of a million examples where more than one group needs access to the data. And more importantly, they might be opposing groups. And they can't have, we saw this with Maersk and with IBM, who created one of the most well-funded private blockchain networks called TradeLens 5-6 years ago, $100 million invested. It went defunct last year. They shut it down. Why? Because all the competitors aren't going to say, oh, Maersk, please invite me into your network. And you got control of all the network, and that's okay with me. You're my competitor. I trust you. But never going to happen, right?
I love this. What about the aspect of like, hey, I'm a company, I want to participate, but I also don't want to see my competitor. I'm trying to make this big business deal. So like, I'm trying to make this deal with Chainalysis. I need to send them $100 million, and then we're going to announce it. But if somebody sees like, hey, I just sent $100 million to maybe the entity's not known, something's up there, something is going to be announced. That's always been, the big thing now with like privacy and, businesses do not want you to see their transactions. What are your thoughts on that aspect of it?
Completely. And this is a total misnomer on public blockchain, because the word public means that everything is accessible. And that's not true. We have encryption. We have all the different types of solutions. We've solved this very elegantly at Stability in that we've created something called a private mempool, which most mempools are getting a little bit technical here, but this is where your transaction goes to in a queue before it goes on the network. And we have an enterprise solution that enables an enterprise to run their own private mempool, which they can permission access to their customers, and therefore their IP address and all that information never gets, it's connected just to the bank, let's say JP Morgan and JP Morgan clients, right? And then from there, they can publish the hash of those transactions. Again, means nothing to anyone when you see a hash of those transactions. They can publish that to the network and have the composability, authentication, verification ability of that. And then being able to share that optionality, free optionality, share that hash or that information so that another entity outside their bank could verify what that transaction was and confirm it, right? And so this is how we've created a solution. The government of Singapore has a very elegant solution on this as well. There's a lot of different ways. At the end of the day, people need to be able to access and verify data on their own and not be invited and allowed access in. with
And
the
I think
typical
when,
private.
you say it's technical, but for a lot of people listening to this call, like the reason why private mempool is important is right now, if you wanted to buy an NFT or at the height of the market, you want to buy an NFT, a miner can see, hey, this person wants to buy an NFT and so do 99 other people want to buy this NFT. Maybe I should buy the NFT. Maybe I should put my transaction ahead of all of these people and I can get the NFT at a cheaper price because there's so much demand that is going to, there's only a limited supply that's going to pump the value of this NFT, which is what we call front running MEB. I think that's where you can like, oh yeah, that makes sense. I don't want people to be able to front run my transactions.
You
And
got it. Miner extracted value is a big issue, MEV, which is just simply the ordering of transactions. When you have your own private mempool, you order however you want as your company, and you just need to ensure that you have the block space to do it. That is a huge aspect, right? One funny analogy we like to consider it like a public bathroom. If you're like a private a private bank client, do you want to go to the public bathroom and get to see your star or whatever, or do you want to have your own private bathroom, right?
Right.
And that's the difference. Who's going in, who's going out, how long are they in there? Often, I use that just to kind of like, it's funny, but it kind of puts it in perspective, right? Corporates want their own access point.
Yeah, and this is especially when you're in an arena, you're like, you don't run into a celebrity at the bathroom because they're not using the same bathrooms as you do, nor do they want to use the same bathrooms, and everyone's asking you for autographs. So that makes perfect sense. You wrote a blog about this BlackRock denied tokenization partnership with Hedera Hashgraph, and it wasn't so much of like, hey, something went wrong there, but it's almost like you're talking about token washing, similar to what we're seeing about AI washing. People try to say they're doing certain projects and they have AI to like look a little bit more prominent in the space. Can you talk about like the main takeaway from that article and what people that are building in the space have to be aware of?
Yeah, I don't want to go too deep into this side, but it's like there's just a lot of marketing in the space. There's a lot of marketing in any industry, but there's a lot of trying to associate marketing. I think anytime if you are lacking utility or lacking growth, or you're always trying to seem a little bit bigger than you are, like we get ourselves into that challenge, right? And I think we need to have a little bit more of a mature approach to the space, and that's what we're trying to be, right? We're trying to be the adults in the room, and I think without getting too deep into it, I think people get a little bit ahead of themselves and try to make things sound like they're bigger than they are. And I've seen that my whole time in this space, whether it's, onboarding these to large institutions, a lot of them don't want to talk about it, right? It's a rep risk. Like their brand is so important to them, right? And they really want to keep a lot of this stuff quiet. They don't want to be disrupted. So they want to do the work and the homework, but we often in this space, we're like, oh, institutions are coming and it's growing and this is all going to happen. It's like, no, they're testing. A lot of this stuff dies in proof of concept land, POC land, because for the 4 reasons I mentioned to you earlier, it can never get outside of that. And that's what we're trying to help the industry remove those barriers, right? And all those challenges so that they can actually get into like mainnet and real adoption and really driving use in their businesses.
I love it. Talk to me a little bit about, what you're doing at Stability. You're a 10-person team, no funding, which to your point of like a lot of these companies are spending a lot of money to acquire users, developers. How are you, running a 10-person business, a full protocol with maybe not like VC capital?
Yeah. Well, we're fortunate in that my 2 co-founders had, successful exit previously. I've had a long traditional finance career. And so we've been able to self-fund the business. That's given us a lot of flexibility to focus on just building what's needed to advance the industry and giving us the runway to do so. We will bring on investment, but we have to be really thoughtful because what is most important in creating a global trust network is that you maintain some level of neutrality, right? You can't have one government owning right? You need to be able to keep that. And that's one. And number two, we really need investors who are mission aligned, right? We could have raised a lot of money and we've had a lot of offers if we would launch a token, as you would expect. But we know that path. We've gone down that path. We know what happens there. And so we need to have mission aligned investors that have a long-term vision, that aren't going to push for a token down the road, right? That understand what we're trying to do. And so with those two things, we've been really thoughtful. And as we grow, we're generating revenue now. We're bringing on customers in many different verticals. That should be relatively easy once you show this brand new paradigm shift. Because at the end of the day, we're a brand new business model, which I haven't really hit. We make money with service and support. A lot of your listeners are like, well, how do these guys make money if they don't have a token?
That's what I was going to that's
right. We're akin, a good analogy would be Red Hat. Red Hat is one of the largest open source software companies in the world for server infrastructure. Every major institution uses Red Hat. It's free to use. It's base software. You want to upgrade support, you pay service and support for that. We're the same. We are the Red Hat of public blockchain. And, our blockchain is free to use today. Your users can go on our website, get an API key, and publish any smart contract, EVM or EVM blockchain, publish that smart contract free to use. And then for corporates, as they start scaling and they have more needs and they want bulk transactions, private transactions that we talked about, all guaranteed uptimes, master service agreements, SLAs, all the things that a corporate wants from a traditional vendor, we can do that, right? And they want that because when a transaction goes down or something goes down, they can't call Metallic like, hey, my transaction didn't go through, right? There's no one to call.
Yeah,
right? And
someone front run our business deal. You're not to get anyone on the line anytime soon.
Yeah, exactly. And so we have that model. So that's how we make money. It's a very simple and somewhat boring model, but we generate revenue, which is a very rare thing in.
That's the rare part of your business model, not having your token.
Yeah. Yeah.
Let me, it's funny, like as we close out the conversation, I think it was Jason from Blockworks posted the cost of building a blockchain and my mind blew. Like it was like $5-10 million. Yeah. Token issuance. Is your blockchain maybe less expensive to build because you don't have this tokenomics involved in it? Talk to me, because I don't think people realize the cost of a blockchain. He said 5-10 million. I didn't see any kind of compliance or regulatory stuff there. So I'm assuming the cost is probably even higher than they've accounted for. What are your thoughts around something like that?
I think the number is going to fluctuate dramatically based on what folks are going to try to build. But also, I think the biggest thing is it's the depth of knowledge, right? And architecting it appropriately, and what language and like how what consensus model and all of those things. There's like a lot of very important decisions, and we brought in a lot of big experts. One of the lead architects of the JP Morgan Onyx blockchain was early with us and architecting our network to make sure that it was architected correctly. So the upfront cost of build is going to vary dramatically. I think the ongoing maintenance of running a blockchain, that's where there's going to be a big difference. When you have tokenomics and you're running the network, and there's a lot more complexity that starts driving and just obviously the incentives on how that works. But it's not easy. The cost is real in building a public network, maintaining the public network in a decentralized fashion with nodes all over the world to reduce latency and ensure performance and all that. There's a lot there. So there's a barrier to entry, I think, from a cost perspective, but also from a technical acumen perspective. There's not that many folks that can build a layer one from the ground up.
Nor do they want to venture. I think it's a lot. Would you say it's fair to say it's easier to build an L2, or it just all depends on what they're looking to accomplish?
Yeah, I would say it's easier. Yes.
Awesome. What are you looking forward to? You're 6 months out of launching the mainnet. What is on the roadmap for stability protocol? Or what are some of your insights? Like, where do you see the future of, we're seeing that real world tokenization has all the hype behind it right now. What are your thoughts?
Yes, we've removed the native gas feed. We've got a feeless blockchain, which enables a very seamless Web2 experience, right? But there's a wallet involved that you can still have there. We're now working, we've got a 24 months development roadmap on some very cool things. And our next mission is removing the wallet.
Wow.
And that's like, well, how is that possible? And we really just got to think about doing non-financial transactions. That's a big difference because all blockchains are financial, public blockchains are financial transactions. But as a feeless blockchain, you can now start doing non-financial transactions. And there is way more non-financial transactions that happen in the world. Think of a Facebook like. You could call that a transaction. How much money are you going to pay for that, right? There's so many things that you could start using it when you don't have value to worry about. So being able to remove a wallet from this experience could be really interesting in some use cases. So that's kind of coming up next. And then from there, it's just, we're laser focused on continuing to increase the speed. We're already a fast blockchain, 2-second block time, but, we continue to get that like tighter and tighter and thinner. And then capacity, finding new ways to store data and make it so that you can really scale this into a global network that can really be global compute and be a neutral network that can, be the next iteration of the internet. It sounds kind of crazy to say, but like that's the goal.
And as you move through, like no wallet, is it now you're not targeting maybe as many financial institutions? You're opening up anything that has, transfer of not value, but transfer of any kind of data and information. What are some of your target customers? Like who would be a target ecosystem or a customer? You're like, hey, this would be interesting as we start to remove our wallet.
Oh, on that front, yeah, that is a data, like it's kind of like data transfer and messaging and being able to authenticate your data. So being able to make any document and publish it to the blockchain with one click, being able to go create a Word document, go file save to blockchain, and it's forever known that you created that document and you can prove it mathematically, right? Like you do it on your Google app, right? Your Google Suite. You can do that today. I can show you that today. And that's a functionality that we have.
I think that's great. I think that is where the world is going. And I think more and more people are going to want to authenticate their work, especially as we're going to see more and more lawsuits involving AI usage of other people's data, other people's content. We're going to see more and more people being rushing to that. And even if there is a small fee to pay, or as you say, an upgrade to the service, just like you have with Google Suite, where you need more room and you need to keep more data on the blockchain, it doesn't sound that crazy at all. It actually sounds like we're moving more and more quickly to that. And a lot of it will probably play out in the courts over the next 3 years. Why we need this, this blockchain to be able to send data for free.
Yep, exactly. And yeah, you nailed it. I think all the use cases that you just mentioned and that seamless use where it's just natural. And anytime you create anything, you're just going to post a hash of it on the chain, right? It's just going to be a natural part. It's probably going to do it automatically without you even having to do it.
Just like autosave. That makes a lot of sense. I'm interested to see, we'll definitely have you back on when you go walletless to see what are some of the use cases that you've grown into. And we'll have you back next year to talk about, 1 year after mainnet launch, what were some of the things that you learned, maybe some of the areas where you pivoted or some of this, the past where you're like, hey, this is a wide open path. Now that we've gone this far, we can keep on moving down. Where's the best place to reach you? It seems like you're a LinkedIn person, but probably spend a lot of time on Twitter as well.
Yes, that's totally right. I do a lot of writing on LinkedIn but I'm on both. So feel free to reach out. Always interested to, meet new and interesting people that are focused on, driving adoption and use of a network. So reach out to myself and the team. Really appreciate you having me on, Stephen. Love the work that you guys are doing. So thank you.
I love this. This is a really great conversation. I knew what you did, but now like when I hear the metaphors and I'm hearing about, mempools and, right click and save to blockchain, it makes a lot more sense and very much aligned with the vision I see the world going to as well. It's been a pleasure.
Thank you.